What if I told you that the biggest financial disaster in a generation didn't start with chaos? It started with confidence, with certainty, with the belief that a handful of companies were simply too powerful to fail. Sound familiar? Let's go back, way back, to a story that Wall Street would rather you forget.
It's the late 1960s. America is booming. And on Wall Street, a new idea is taking hold. Forget complex strategies, forget diversification. Investors had found the ultimate shortcut, the one decision stock. Buy it, hold it, never sell it. These were the Nifty 50, household names like Coca-Cola, McDonald's, and Disney. Companies so dominant, so untouchable, that analysts genuinely believed gravity simply did not apply to them. And for a while, they were right. But markets don't care about confidence, they care about math. By the early 1970s, while the average stock in the market traded at around 15 times earnings, the Nifty 50 were trading at 42 times earnings, nearly 3 times the market average. McDonald's trading at 86 times earnings, Polaroid 90 times earnings. And together, these 50 stocks had swelled to nearly 45% of the entire US stock market. Half the market, 50 companies. Everyone was all in.
Then, the dominoes started falling. Oil prices didn't just rise, they quadrupled almost overnight. Inflation surged past 11%, the gold standard collapsed. The economic foundation that everyone had taken for granted cracked. And when it cracked, it didn't crumble slowly, it fell. The market dropped 50%, the worst bear market since the Great Depression. Those untouchable giants, they got crushed. Coca-Cola, down over 60%. McDonald's, down over 70%. Polaroid, wiped out, down more than 90%. And here's the part that keeps financial historians up at night. It took 8 years until 1981 for the market to simply crawl back to where it had been before the crash. 8 years gone.
Now, fast forward to today. Different names, different decade, but take a look at the structure and tell me this doesn't feel familiar. Microsoft, Apple, Google, Amazon, Meta, Tesla, Nvidia, the Magnificent Seven. These 7 companies now make up roughly 36% of the entire S&P 500. Sound familiar? And investors? They're treating these stocks exactly the same way the 1970s crowd treated the Nifty 50, as bulletproof, as one-decision stocks. Nvidia is trading at 50 times earnings. Tesla? 247 times earnings. 247 times! The names have changed, the technology has changed, but the psychology, the blind, unshakable belief that this time is different, that hasn't changed at all.
Here's the truth that Wall Street has never been comfortable saying out loud. This time is never different. The market doesn't punish companies for being great. It punishes investors for overpaying. History doesn't repeat itself exactly, but it rhymes, loudly and expensively for those who refuse to listen. The question isn't whether you believe in these companies. The question is, at what price? Because in 1973, people believed in Coca-Cola too.